Even on a lousy day like today, and it was hideous out there, some stocks managed to roar higher. Take Red Hat, the #1 provider of open-source Linux-based operating systems for the enterprise, along with middleware, software for virtualization and storage, as well as some mobile and, most importantly, I think, cloud-based offerings. Red Hat is an incredibly well-run company, and just last night, they reported yet another magnificent quarter. You know, I've been behind this one for a long time. Let me read you some of the headlines so you get a sense. Squeaky clean execution in strong third quarter, said one analyst report. Firing on all cylinders, another, or my favorite, we tip our Red Hat for the past 2 years' successes. The company delivered a 1-cent earnings beat off a 47-cent basis. Subscription business increased by 16%. Deferred revenue rose 14%. We know how much that means for sale, like when we talked to that from Salesforce. That's the future. Plus, Red Hat raised its full-year guidance for 2016. How many of those do we have? Oh, and don't forget, all these numbers would have been a heck of a lot stronger if not for the super freaking strong dollar. It's no wonder that Red Hat surged $2.54, or more than 3% today. Okay, so maybe the stock has gone up a lot, but managers will pay up for this kind of company. That's exactly what happens in this supercharged environment. So let's check in with Frank Calderoni. He's the CFO of Red Hat. Find out more about the quarter and where his company's headed. Mr. Calderoni, welcome back to Mad Money. Good to see you, Frank. Have a seat.
Jim.
Frank, I want to get right into it. Everybody's using Amazon this year, and Amazon uses Red Hat. What do? And could they do it? Could they be Amazon without Red Hat?
You know, so we have about 100 plus certified cloud service providers. Amazon is one, and they actually now have been a customer of ours for a number of years. And also, what they do is they use our operating system, and they make some of their customers use it on their cloud-based offerings.
So Amazon's out in the cloud, and Red Hat is a service provider to Amazon.
Right. And as I said, we have over 100 like that, and one more recently was Microsoft. We just announced that.
Well, that's one I want to talk about, because I think that Microsoft was the biggest thing that I've seen out of Red Hat. But this Azure combination, and we have been big backers of Satya Nadella. Stock was down today, but it was a 52-week higher today. Is that already kicked in, or is that just the beginning? Because this doesn't seem like one of those for-show partnerships.
Well, we just announced it about a month ago, so it's really at the beginning. We really haven't started to see some actual business. Okay. We just closed the agreement, and hopefully over the next several months, several quarters, we'll start seeing that business ramp.
Now, you are in 90% of the Fortune 500 to have done work with Red Hat?
Yes.
Okay, so let's say I'm a skeptic. Doesn't that mean you already have everybody and there's nobody to get?
Well, I mean, the key thing about what we have is it's one thing to kind of be having a customer in all the enterprise, but it's how you also sell to them and then upsell, right? So we started pretty much with the Linux, as you mentioned, the operating system, which many of our customers use. But now, as we continue to expand our portfolio, especially the emerging, you mentioned some as far as OpenStack, OpenShift, middleware, management, they're starting to see more uses on top of a Linux foundation operating system to continue to work with us see that. So it's really kind of, if you look at what we spend with them a couple of years ago versus what we're spending now and what we'll spend in the next several years, we continue to increase the amount of spend. There's been a survey of CIOs more recently that was done. Goldman Sachs did this a couple months ago, and they looked at IT organizations today and also what they expect to spend 3 years out. And it showed a significant increase as far as where they're spending today versus with Red Hat and where they will expend in a couple of years.
What's the affinity, it seems like right from the beginning, with financial service firms in Red Hat?
You know, I think financial service firms, just having been in the technology business for a number of years, they tend to be kind of the leading edge, bleeding edge in some cases when it comes to technology. And so what we're finding, not only were they on Linux, but they've been one of the industries that have been working with us on OpenStack and OpenShift, right? Starting early, because they'll spend the time making the investment on the technology and kind of working with us along as a partnership and seeing that continue to go through. So they were early with some of these emerging technologies. They're actually in full deployment right now and then expanding their use over time. There
was a statistic I saw when I was reading the conference call that was kind of amazing. You got every single re-up that you had, you won. Yes. But you also are getting 120% out of
what we had before.
How's it possible?
Well, it's kind of what I was saying, right?
Because you're doing more business.
You're spelling more business. They're actually using our products more. They're using more of our products, especially as they think about the cloud and they start to build out cloud. Sometimes they'll start with one installation of a cloud and then continue to expand, whether it's on the private side or on the public and kind of in the hybrid environment. So we're seeing much more of an upsell.
I know that security is always an issue now when we hear about open systems and closed. It doesn't matter. The Navy has put you in its newest warship, I would not think that the Navy would pick you if they felt that the warship would be exposed to cyber terrorism.
Well, you know, it goes back to, I would say, right close second to the financial industry. I would say the public sector is the next industry that has basically been with Red Hat for a number of years, and one that they've really developed, we and them have developed a good trusted relationship. Because yes, I would agree with you as far as that's where the tried and true early on from the standpoint and the trusted relationship over time, and then continue to deploy new applications as they work through that.
Is your best moment to come when another contract's up from a competitor or from an old system, from a from a non-cloud-based system? Is that when Red Hat can strike?
So it comes a couple of ways. You know, it's been somewhat of a cannibalization of some of the existing markets. So you've got to look at like proprietary software kind of moving to open. So when you start to see that transition, you know, many customers are looking for the benefits of open. So they'll kind of come to Red Hat and kind of look at it from that perspective. Within the operating system, some of them are shifting from, let's say, a Unix still or Windows onto a Linux. You've got some that are moving from a free Linux to more of a paid Linux because they're looking for some of the support and the services that we provide. So that kind of allows us to have some upside from that perspective. And then again, you're looking for the ones that are on the operating system that are looking to do more with us.
I think it's interesting you mentioned Windows because I always felt that people leave Microsoft to go to you, but now that you're partners, I think that's really fabulous.
Oh, sure.
Absolutely. Okay, that's Frank Keller. He's the CFO of Red Hat, which is really, frankly, the only stock that I saw that was in the green today. Mad Money's back after the break. Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.